So good evening traders, welcome back to the channel. So I'm back with another video on our strategy, our setups. So today we're going to be talking about AUD chief and a trade that happened on AUD chief, just to show you that the strategy works on each and every pair as long as it uses candlesticks. So you're going to be going through the charts, and I see another one happening here. This is GBP for our time frame. There is an inverted head and shoulder here. I know it is not one of our setups, but it is something that I learned over the period I was learning how to trade. The head and shoulder looks like this, looks like that. This is shoulder, price broke down, then from this head here came and used this shoulder, and now it is going to the upside. It is going to the upside. It is one of those formations that will always work out in Forex, and now it is on NZD. This is what? GBP chief. However, it is not the reason as to why we are here. So you guys are going to subscribe to the channel, and then I'm going to be going through the analysis of NZD AUD chief. So you subscribe, and we're on the road to 500 subscribers. 500 subscribers. We have moved a little bit slow from 400 to 500 because numbers have not been adding up. I don't know what has been happening, but I know we are going to reach. We are going to reach there. So guys, subscribe, and then proceed with the video. Okay, so I think let's proceed with the video. So this is AUD chief. This is AUD chief, and this is the 4-hour time frame. So what happened on the 4-hour is we had price dropping down, making lower lows, lower highs, lower lows, lower highs, lower low, lower high, and then it failed to make another lower low, signifying that we might be going to the upside. And if you look at it very well, it also made that head and shoulder here. Let me just mark it. Here, it made a head and shoulder here. This is the shoulder, this is the head, this is the shoulder here. So immediately priced up there, it started going up, making a higher high, breaking this previous lower high. That signifies that we have changed the trend, and possibly we might go into higher highs, higher lows. So after breaking this high, there was a demand zone around this area. Why was it a valid demand zone? Look at the move away. 1, 2, 3, 4 candles to the upside. So you mark that area. Very well, like that. You mark your demand zone like that. So what are you waiting for? You're waiting for price to, now that it has broken here, waiting for price to come and tap you in at this area, and then you target the previous high. So your trade would ideally look like this. Price will tap you in and you'll target the previous high, which is 1:2.9. That is 60 pips. 60 pips to the previous high. So how did the trade come up? We took a break of structure here, then a nice move away, and then there was a trend line that was removed. If I can just draw that trend line here from up to the bottom, I think I can use this one. That one there. So the trend was broken to the upside, making a higher high, also removing this supply zone here. So it was a good demand zone because it removed opposing supply zones and also cleared the downward trend line, signifying that we might be going to the upside. So price came, tapped in that area perfectly and respected the area immediately. Price started moving to the upside. It moved around 1:3, and that is 65 pips. 65 pips for that matter. So on the same AUDUSD, this is a setup of drop, base, rally, breaking structure here. Same AUD chef, we had also another setup in that one. After reaching the target, price retraced on this rally, base, rally, demand zone. So price reacted from that rally, base, rally, demand zone, respected it, and then it went up. So this one you would go to the 1 hour and then see it very well. So your zone would look like this, like that. So what you do is you put here your entries, and stop losses 6 pips. I think now you'd go up to around 10. Even 9 was okay, but I would prefer 10 is more comfortable. You target the previous high. Target the previous high, which is this. And I think that is a 1:4, 45 pips. Price almost hit the zone and then turned around, but I know it is going to continue up. So we have the same setups over and over again. You just have to master them. No, look at the reaction from here. This is a drop, this is a rally, base, rally. Look at the reaction. First we have an engulfing candle, then we followed with a bullish candle with a rejection from downside, and then another two good bullish candles, and then we formed a break and then continued the upside, which means this area was a strong buy zone. So price came, respected the area very well, and then it went to the upside. So that is EuroChef. The key takeaway here is there's also support and resistance, I think this one here. So the key takeaway here, so this is one of our high probability setup. Support, broken, turns into resistance, then price goes up. When it comes back here, we buy. So this is one of our high probability setups, and it really played out very well. So what you have to do is just to go on the charts, be looking out on those setups. Look out on those setups. When you see them, mark and wait for price action to come back to that area. Remember, do not chase. Prepare and execute when price comes to that zone or your zone. Do not chase the market. Prepare and execute. Okay, so I think that is all on AUDGF. That is a trade that I wanted to show you that happened. So I don't know if you guys, any of you has any questions concerning this, but I think the setups are clear. This was a very clean one. This is the one that we always use for high probability setups, or the one for full margin. Price uses this as resistance, then breaks it, uses it at support with a bullish engulfing candle, and then a good move away. So we just wait, mark our zone very well, wait for price action to reach this area. You can use the ATR if you're not sure on where to put your stop losses. Just come here, that is your stop loss, which is 6 pips. Look at the ATR. What does it say? ATR says 7.8, so that is 8, round off to 8. So 8 plus 6, that is 14. 8 plus 6, that is 14. So that for your stop loss is going to be 14, but in this case you didn't need even 14. 14 was very far. You needed around 13 maximum. So 13 is risk to reward will be 1:3. 1:3, which is a good risk to reward. 1:3, like that. Or you can reduce it like this and then make it a 1:4, just like that, and you hit your take profit. So that is all for now. You guys can subscribe to the channel. Also, if you find some value from the video, kindly don't forget to like the video. Okay guys, and share. Okay guys, so if there is anything, just put in the comment section and I'll be happy to do a video about it. That is all for today. Bye. Good.